Good morning, everyone, and welcome to today's webinar. My name is Alex Paul from InvestorStream, and I'll be your host today. Today, we have Kalina Power Managing Director Ross Maclachlan, who will be providing an update on the company's commercial and corporate progress with respect to its waste-to-heat power projects being developed and pursued in North America. Following the presentation, Ross will be available to address any questions you may have. We'll attempt to get through as many questions as time permits. Please feel free to send through your questions via the chat platform in the question pane in the GoToWebinar control panel, or simply email them to me at alex@investorsstream.com.au, which many of you have done already, and I really appreciate that, so thank you very much for that. You can also download a copy of the presentation by navigating to the handouts pane in the control panel, and the presentation has also been lodged to the ASX, so you can download it from that platform as well. A copy of the webinar will also be available on Kalina's website and social media platforms later today. Before I throw it over to Ross, once the webinar is concluded, I'd recommend jumping over to the Kalina website and watching a short virtual tour of the Kalina cycle plant. You can find that link on the second slide of the presentation, the one that you can see up here. Of course, here's the company's disclaimer. This slide here, this is a quote from Munro Partners, a global investment fund worth $5 billion, speaking to the AFR. Given Kalina is in the clean tech industry, I'm sure you'll be able to extract the synergies between what Munro Partners is saying and where Kalina is going with this technology. It's quite a pertinent quote, especially in this day and age as well. So, and for those unfamiliar, here is the capital overview or the corporate overview of Kalina Power, which you can examine further in your own time. And enough from me. I would like to throw it over to Ross to kick things off. Ross, the floor is yours.
Well, thank you, Alex. It's great to be with you again, and really appreciate the opportunity to speak directly with shareholders and potential new investors who are attending today. We put out a news release with a corporate update apart from our Saddle Hills project, which is our major showcase project that we're doing. And when we did that, we got a lot of interest and a lot of calls, and we realized it was important to get that information out to let investors understand why we're in this business and what activities we're involved with in addition to our Saddle Hills project. And in doing so, it has prompted us to prepare a slide deck, and we're using that slide deck, of course, to reintroduce our company into new markets in North America and elsewhere and throughout Australia, to really, I think, convey the broader story. Because at the end of the day, as this mission statement states below there, this has been our plan for the last several years. Let's not lose sight of that. We are not in business just to get several projects underway and have a commercial platform established in Alberta. The idea is to establish that commercial platform in Alberta to enable an effective deployment of this technology on a global scale, at an industrial scale. And so that's why we pulled this presentation together. I hope that it helps convey the message, and we're looking forward to answering any questions that you'll have as we go through this. But clearly, we are a technology leader in this sector. There's no doubt about that. We have an exceptionally interesting and very compelling commercial pipeline of projects that are in development right now, and we'd like to talk to you about that today. And of course, we have just an exceptional team, and our team continues to grow with people joining our company and getting interested and involved in our company, and also new and developing commercial relationships that I think are going to stand us very well going forward. If we go to the next slide, please, Alex. ESG is the story today, and how compelling a story is it when you have a zero emissions power technology? And I think if we had a zero emissions technology, or any company had a zero emissions technology that could serve to reduce the carbon footprint of industries which are heavily energy intensive in any one of these individual sectors, I think most of you would say that's a major opportunity for any company, let alone a company that has an opportunity to go into massive multi-billion-dollar markets in each of these sectors. Now, these aren't the only ones that are there, but these are the ones which we have clearly identified. These are the sectors in which we have already shown that the technology works. And this is really a very timely investment. This is a very timely place for us to be as a company. One of the big questions, of course, is, well, how do you get to global scale, and what do you do next, and how are you going to do it? And, you know, I think I said in a recent interview that companies like ourselves easily get drawn into chasing opportunities everywhere and then not completing what they set out to do. We have chosen to focus ourselves on a plan of commercializing our technology on a number of different industrial applications for this technology in Alberta. And key to that is the modularization of the Kalina cycle, such that we can establish a supply chain, have a sense of what our costs are, a very firm sense that we can basically understand very clearly what our value proposition is in each of these applications, and then go forward into marketing this technology into other markets apart from just Alberta. You go to the next slide, please, Alex. Now, I've alluded to these multiple near-term value drivers. It's clear that there are a number of things which we're doing, which we think represent advancing our project pipeline, but also really creating value for our company. One of the things which everyone is very interested to hear about, and we can talk about that more later, but is pursuing a dual listing on the Toronto Exchange. This is, I think, a very timely thing to explore, given the fact that our company is very, very active in the province of Alberta, being here in Canada. It's a platform to take our technology throughout North America and, of course, elsewhere. But the fact that we have such a footprint in Alberta, it really means that we should be seriously considering a dual listing on the Toronto Exchange, and I will speak to that more fulsomely later on. Of course, our flagship 64 megawatt project, Saddle Hills, is targeting full notice to proceed in the fourth quarter of this year. We're excited about that. We'll speak more specifically about that in this presentation. And something we introduced in the last couple of news releases and alluded to is, and this is frankly coming our way because we're getting drawn into the opportunities as we pursue tolling agreements with various gas producers. The opportunities have presented themselves for us to even consider looking at pursuing ways for us to farm in or joint venture access to our own reserves of gas. And that, of course, really makes a significant difference in terms of our margins, but also more importantly, the security of supply going forward. And that's very attractive to lenders. And then working, we think, in this new application that we've alluded to with a major global energy company that's looking at improving energy efficiency in oil sands extraction. This has gone from not even on our radar screen a year ago to something that has really started to really take off this past January, February, to the point where we are very comfortable that we're on track to do a project with these guys, and there'd be more to report on going forward. We've alluded to the fact that there are opportunities for our applications of our technology for waste heat to power opportunities on gas line compressor stations. Everyone knows that we're also very successful in the application of using the technology for geothermal. And in both cases, we'll talk more fulsomely about this, how we are advancing opportunities where we believe we'll be able to be involved in bidding on projects in that regard. And of course, that also we'll talk a little bit more fulsomely about reactivating the project at Klamath Hills on a geothermal project as well. Next slide, please. I don't mind sharing this comment with you because when we're putting this PowerPoint together, do you talk about government funding or you talk about government support? At the end of the day, some people don't want to get involved with projects which require government funding, but I'll tell you, as a businessman, I'm there with my hand out if there's going to be an opportunity to make our projects get on track faster and more financially successfully than otherwise would be the case. Absolutely, we're going to be there. And we know that government funding is there in a big way. But I think more important than direct government funding is the government support that we're seeing in legislation And certainly we're seeing that now really taking hold in the United States. But we're proud to say, and by the way, this was just updated this morning, Canada, of course, you guys were probably following with great interest, but we had a federal election last night, riveting. We spent $600 million and basically things didn't change at all. We still have a minority government led by the Liberals, but very interestingly, there was overwhelming support by the majority of the electorate for the carbon tax measures that have been taken by the Liberal government, increasing the carbon tax from $50 to $170 per ton. This is a major catalyst event that's happened here in Canada, and I think that's trickling down to North America. And of course, we've seen what's happening in the United States with all of the new clean energy spending that's coming our way. Next slide, please. This quote came across to us, and I'll just point this out. I think maybe everybody's known this because this is actually an old quote, but the heat that is wasted just in the utility sector alone in the United States is greater than the total energy use in Japan. Now just think about that. So when people are asking us, what's the scale of the opportunity for our company? Well, I can't say what it is for our company. I can say what it is for our sector. For our sector, it is massive. It is absolutely massive. And here's a quote that just in everyday English just does describe just how big the opportunity is. Next slide, please. Now, this slide I'm not going to go through because I've gone through with many of you shareholders in the past, and new investors, I would just ask you to maybe take your time to walk through and understand what it is our technologies in the sector do, and what is involved in the sector and who the major players that are in it. And whenever anyone asks, well, you know, just how big could a company ever become in this sector? You just have to look at the New York Stock Exchange, where Ormat is the leader with a technology which we believe is very, very good. There's no question that Ormat's a great company, and it's no question that their technology is very good. We just happen to have a better one. And our technology is more efficient. And if we can follow the right steps and take the right steps to put ourselves in a position to properly scale this technology and the business involved with supporting this opportunity, we have an opportunity to really, really scale in a big way. Next slide, please. This is a summary of what those differences are, and a lot of new investors would want to go through this and see what the differences are here. But in a nutshell, our technologies are very similar to that which Ormat uses, except for the fact that our working fluid, rather than being one that's made of pentane or butane or a refrigerant, has a variable boiling temperature. And just because of that single feature alone represents significant opportunities and improvements over ORC. But the most important thing I draw to your attention is the second bullet point at the top here. It's because of these efficiencies that opens up the Kalina cycle to massively more industrial markets than ORC is pursuing right now. If you really look at the ORC penetration rate, you'll find it's extremely active in certain selective industrial applications, particularly at higher temperatures, and very active in geothermal. But there are limitations to its application in geothermal, and there are certainly many more industrial applications available to the Kalina cycle than there are with ORC. Next slide, please. Our business model at this stage is pretty simple. Everyone knows that we are developing our own projects in the province of Alberta to establish a commercial beachhead, a foundation, as it were, for us to be a successful company. In those projects that we do with ourselves or with other partners, we're going to get reimbursed for developing those projects. And that's a typical project developer gets paid a reimbursement of their expenses. We typically get paid as a project developer a percentage of the CapEx, 4%, pretty standard. And as a developer, we try to develop projects which are profitable enough for us to earn an equity carried interest, which can vary depending on the performance of the project, but roughly about 10% equity in the project. And we have opportunities every time to take an extra investment rights in those projects, should it warrant and should we feel it's accretive to our company to do that. for other projects, and we are bidding on some of these projects in Alberta and Western Canada now, and we're hoping to bid on more going forward. These would be licensed projects. And in the event that a third party wants to license the technology from us, we're looking at getting paid $35,000 per megawatt per year. And that's being paid to us, not for the entire project, but for the part of the project that uses the Kalina cycle. Next slide, please. Now, I've spoken about the people that are being involved, and you saw on the cover page or the corporate snapshot and the corporate leadership page. In addition to that, this is our project team that frankly is hailed everywhere throughout the province and with our international partners that we're negotiating with right now. Everyone is extremely impressed, not just impressed, not impressed with their resume, but impressed with the caliber of work and the types of interface that they have with our company. And we're very proud of each and every one of them. And it's an exceptional team that's been brought on board. Next slide, please. This is our priority number one. I'm going to talk to you about several of our commercial priorities. And these were alluded to in our recent news release around our corporate update. But the number one, let's not lose any, make no bones about it. Our number one priority, project number one, and priority number one is our Saddle Hills project. This is a 64 megawatt modularized small scale combined cycle power plant. The CapEx is about $214 million, and we're on track, we believe, to be able to project comfortably double-digit unlevered returns. I must tell you, those returns have gone up and down over the course of this journey for the last several years, depending on how large we're building it, what configurations we were using, et cetera, et cetera. What I am pleased to tell you is that our return threshold, our return, I'm not able to say this because I'm not allowed to say exactly what our returns are because of ASX rules. So please give me some room there. But I will tell you that our numbers are pretty much right in the same range as they have been for the last 2 years on average. So when we started this exercise, we had a target. We are at that target today. In spite of the significant industrial inflation that we've seen, in spite of the rising costs that we're looking at, we're able to manage and find out that we're ending up still projecting our returns to be about the same as they were. In fact, pretty much identical to what they were when we started this exercise. The next slide, please. Now, this project, as many of you know, it involves two 32 megawatt power blocks, and each is configured with a 22 megawatt gas turbine from Siemens that is capable of actually running with blends of hydrogen as it becomes available. It's one of the reasons why it's been selected, but it's also been selected because it's best in its class in emissions and its overall performance. And this is coupled with a 10 megawatt zero emissions Kalina bottoming cycle, which is where we capture the waste heat from the Siemens SG600 and we generate zero emissions power, this extra 10. In this particular application, in this location in the world, because this is one of the things around thermodynamics and parts of the world make a difference in terms of ambient temperature, et cetera, we're delivering 40% extra power over what we estimate and others have estimated that ORC would be able to deliver in the same application and at this scale. What is key, what is essential in this initial project and the projects that we're doing going forward is that it's a modularized design. We want to have it standardized, repeatable with performance guarantees. It limits our in-field labor. It really improves quality control and it reduces the overall construction schedule. And it puts us in a position where we can cookie cutter these things and do multiples of them. So whether we're doing a 32 megawatt block or two 32 megawatt blocks or 30 or even three 32 megawatt blocks, we're in a position to be able to do that in a repeatable way. Next slide, please. And these are just some of the key strategic relationships we have in place, which we've articulated to the market previously. And without these relationships, it would be much more difficult. But I believe that the reason we have the caliber of these terrific relationships is testimony to the people on our team the interest that everyone has in, of course, in our technology, but really it's the people on our team delivering and developing these projects and interfacing with these companies so well that enables us to have these kind of relationships. And it's something we're very proud of. Next slide, please. Here's our project schedule. I'm sure someone's going to hold us to every single month here and there as we get out into the out months, but the reality is this schedule gets updated continually and all the time, and as we get closer and closer to each event, I'm always able to say I have greater certainty around making my predictions as we get closer to each event. But this is our timeline and our schedule. Take a look at that, and it should give you some sense of what the overall timelines would look like, but also what has been done over the last several years to get to where we are today. Next slide, please. Now, amongst our commercial priorities, it might seem obvious to everyone, but generally we're saying gas turbines. So what does that mean? Well, we are developing these modules for the gas turbines with the Siemens SG600 for a specific application in a combined cycle power block, which is what we've done. That doesn't mean that it's just, you bolt that onto another gas turbine and it's Bob's your uncle, away you go. Is that turbine being used for power production, or is that being used for mechanical energy, such as would be used in a gas compressor station application, etc.? The terrific part about this is it's almost the same. Not quite the same, but almost the same. So we're in a position right now where we have a 64 megawatt combined cycle power block, and that power block can be marketed by Siemens and ourselves anywhere in North America. In fact, we can even do the 32 megawatt block marketed anywhere in North America. That is an exciting thing that we hope to be in a position when we finalize our and get this first project away. The next part of that is to be able to take that same design and modify it slightly for applications with compressor stations. And by the way, there's a massive amount in Canada, as there is in Australia even, of pipeline compressor stations in those two jurisdictions, the United States as well. There are massive opportunities for us to look at waste heat to power on compressor stations, and being able to bid on that opportunity and bid on those kinds of projects is what we're doing right now, is preparing for ourselves to be able to do that and just modify the power block or the application with the Kalina cycle, the module, such that we're able to effectively bid on that business. Next slide. Now, geothermal opportunities. Everybody has heard about geothermal for a long time. There's problems with geothermal, and that's one of the things we are very careful about. We don't want to be necessarily project developers in the geothermal space. That being said, our technology has such advantages, especially with low temperature applications in geothermal, that we want to have a package available because we get asked for this all the time. Next slide, please. So as geothermal starts to take hold, and some people predict it, well, and the reason is because it's zero emissions power with a zero carbon footprint, and more importantly, over solar and wind, it's available as baseload all the time. It's a very, very attractive resource, and we're seeing this industry start to take off. And part of what's liberating it to take off is, of course, whether it's carbon taxes or carbon offsets or investment tax credits to encourage the adoption of it. We're seeing a lot of interest in that. And so there's some stats here that are on this slide, which I think are rather compelling. And this is what prompted us to work with power engineers to develop what we call a generic 10 megawatt geothermal project, as if it was being built in, let's call it the Pacific Northwest or Western Canada, and have that design case completed and done, which has now been done. And we're going to take that and have that modularized, a cost estimate for that to be modularized, such that we can then be in a position to properly quote and effectively quote, knowing who our suppliers would be, knowing who our modularization and fabrication partners would be, having all of that in place. That's one of our targets to get done very soon, so that we're in a position to start properly responding to competitive requests for proposal and then bidding on other projects. Interestingly enough, that same work will be very applicable to the Klamath Hills 10 megawatt geothermal project in Oregon, which we have reactivated. Next slide, please. Now, hydrogen and LNG both involve processes by which one has to take gas into a liquid phase, into a gaseous phase, back and forth, transport it, etc. So they have some common and very interesting applications, this is why we loop them together, because at Kalina, we've actually done work and done some preliminary engineering on applications for LNG, which we think are also applicable to hydrogen. And we are looking to not only explore opportunities for waste heat to power opportunities, the waste heat that is often, not always, but often a result of the processing energy that is necessary to produce hydrogen and to produce LNG, but also in the liquefaction and then the transportation and then the regasification phase. And without getting too much into the weeds on this, I will tell you that we're pretty excited about this. We've developed some IP around this, and we're now talking and want to talk with more industrial partners who we think are properly qualified for us to work with. Next slide, please. Now, this is an interesting one because the oil sands, which is, as everybody knows, is an extremely energy-intensive industry. And the whole industry, the entire industry, looking for ways for it to reduce its carbon footprint. I will make no bones about it. The fact of the matter is, I don't know how hard they're going to, what they're going to do to reduce their carbon footprint. They've got a long way to go to compete with other sources of energy, and we all recognize that. But we all have to understand and recognize that it is an industry that's not going away anytime soon. It is still there, and we have been introduced to and working very closely with a major energy company, an international energy company, who recognizes an opportunity for the Kalina cycle to use their, let's call it their wastewater streams, which, by the way, are extremely hot. They're not that hot, which is terrific for us because it gives us a competitive advantage over ORC or others, but it's hot enough to make power. And they've identified an opportunity where there's a potential for us to do up to 80 megawatts. We think we're going to go forward in the months ahead here and land on terms for which we can end up doing a 4 megawatt initial commercial project with them. Next slide, please. So in concluding, and by the way, I'm sorry that we haven't got more time to get into many of the things which I think properly, with enough time, we could spend more time on several of these points, but I'm also mindful of everyone's time and attention. But in conclusion, we are looking at pursuing a dual listing on the Toronto Exchange. I will tell you that we are in discussions with different investment banks as to how that would be best accommodated and happen. We know that we have a superior improvement in zero emissions technology, and it's because we have that technology and because we have a well-advanced pipeline with multiple near-term drivers. I can tell you that that makes us an interesting story for these investment banks who are looking for us to get dual listed. It's an interesting story for them to see. And with a technology platform that I think everyone understands from this presentation, I'm not going to forecast what we're going to do with that international opportunity. What I'm going to do is tell you that we're going to take every step possible to be in a position to go after that market. And by doing what we said we're going to do, which is get our first commercial projects under our belt in Alberta, bid on more projects, have the modularization of the Kalina cycle and all the engineering work and all the supply chain efforts, everything necessary in place so that we can go after this massive market in various billion-dollar markets throughout the world. And of course, this is against a backdrop, as we mentioned, of unprecedented government and institutional support for clean tech. None of this would be possible, of course, unless we had a team that was capable of delivering. I think we have an exceptional team that's not only going to be able to deliver us what we're setting up to do right now with our commercial projects in Alberta, but I think this will lay the foundation for us going forward. There are several appendices that I'm not going to go through now, but they're there and available, I believe, at the end of this PowerPoint that was circulated that if that didn't come through, we'll certainly share them with others. But that does it for me on this part of the presentation. I look forward to handling a number of questions that you might have for us.
Thanks, Ross. The first question is, with the last two updates indicating possible slippages in timing and cost of the Saddle Hills Energy Centre, what is the expected timing and cost impacts if changes are not able to be implemented?
We were transparent to say that we had concerns around the schedule, but the schedule has more to do with the schedule to construction. We think that the schedule that we have right now for the construction phase that we're working through with Enerflex is just too long. That's the timing issue we had with them, not in terms of FNTP, but rather in terms of the overall schedule. The overall schedule, the longer a schedule is, the more time you have people on site, the more time you have people managing and oversight, et cetera, and that adds to the cost. We're looking to reduce that schedule and thereby reduce the costs. We are very, very engaged right now between power engineers and ourselves and Enerflex at looking at reducing the overall CapEx. We just absolutely believe it can come down, but we're not holding and waiting up for that. We're using those numbers, and those numbers are what provide us with the returns that I was mentioning or alluding to earlier, which are consistent with what the returns were when we started this project that we had as a target. So we're meeting our returns. We think there's an opportunity to improve those returns, but we're not going to wait. We're going forward right now, looking at raising the money that is necessary on the debt side for this project with those numbers.
Thanks, Ross. Can you just talk us through how much money the company has got in the bank currently, and can you confirm how much the company anticipates to receive upon FNTP?
Sure. We don't have very much money in the bank at all right now, and in fact, several of the senior management team, we elected not to pay ourselves for the last couple of months, and we're quite confident we're going to get our project, the company properly funded. We just didn't think it was appropriate to be paying ourselves at this particular time, so we haven't done that. So that's how tight it is in terms of the cash. We do have cash in the bank to meet our current obligations, and that's what we're doing. And of course, as I think everyone knows, we have access to facilities which we could draw on if necessary, but we don't think it's going to be necessary given the feedback we've had from various key investors who are there to support us. We are more obsessed, as it were, to make sure we get the entire story out to all of our shareholders, to the market in general, so that we can properly in an orderly way get a financing done. That's important. The second part of your question was how much do we anticipate receiving on FNTP? I just remind you that with FNTP, there's two elements to that in terms of cash. There's the element that comes our way of a reimbursement of expenses, and then there's a 4% development fee that we would be looking at receiving. So if all goes well, that's what we would get. Perhaps we'll get more, but that'll come down to the wire in terms of our final negotiations that we have with our lenders and equity investors.
And just to follow up to that, and I think you might have alluded to it there, but obviously with the FNTP due for Q4 and other projects, do you have sufficient funds to get through without any fundraising, or are you looking to draw down from existing facilities?
No, we would need, and I think what we'll do is we'll raise funds, and I think we'll raise funds, as I said before, with parties that are who have a vested interest in the outcome being appropriate here, and that includes some of our major shareholders.
Now, as we mentioned, we're approaching FNTP on the first 64 megawatt project. What are the plans for subsequent plants, and where will we see the next project or the next projects, plural, reach FNTP? Will this be before the option expiry date on the 27th of August next year?
Yes, and you know what, just before I go to that next one, if you don't mind, Alex, I want to go back and properly, more fulsomely answer that last question, because I don't think I did a very good job. So allow me to do that, and if everyone will forgive me. When we say that we're going to be doing this with the input from our major shareholders and the support that we believe we have from our major shareholders, it's because we're confident that we're going to end up finding new investors who are going to come to the table and come with us. But what we don't want to do is just rely on that new money coming to the table. We know that the new money coming to the table doesn't have a vested interest in seeing the prices high. They'll want it to come in as low as they can get it. So what we want to do is make sure we have proper support from our shareholder base to go together with new money that's coming to the table. And that's really what our objective is, to make sure we have new money coming to the table, and that's going to be supported by our shareholders. Now, to answer your next question here, if I can just make sure I paraphrase it properly, I mean, I think with all of our focus on getting this first project done, if you don't mind me saying, I'm a little less fussed about the exact timing on the second project coming forward. All I'll tell you is we have 300 megawatts of projects in our pipeline. Can we advance some of those more quickly? Sure, we could. But I think as stewards of the cash that we have, we don't want to raise too much money and just to move ahead our second and third projects at a time when we're just trying to get our first project done. And I think our focus has to be on getting our first project done while we keep these other projects warm and alive. And that's basically the best way I would put it.
Thanks, Ross. So we've touched on Fntp expected in Q4. When will the project start construction with full funding in place? Are you expecting it straight away, or are you anticipating that there'll be a delay while finance gets sorted? And I guess to sort of sum up the question, how much of this is already in place and ready to go once Fntp is hit, or is it a matter of finance negotiations starting once Fntp is hit?
Yeah, I think it's probably important. Let's just remind everyone about how that would work. Okay, so in getting the financial commitments from, let's call it the lenders, that's the primary folks that we're talking to now about the lenders coming in. The lenders are going to want to see that your project is when they say fully contracted, they mean fully contracted to the extent that they think those contracts are necessary. So, for example, our Alberta Utilities Commission permit has to be in place, that's for sure. Our lease with the province has to be in place. There are a number of things which have to be in place. There are some things which they're not that fussed about. I'll give you a good example. You don't have to have your final electrical tie-in all completed and done, but you have to have an estimate as to what the costs are for it. And you don't have to have your gas interconnection done, but you have to have your right of access established. You have to have your estimates for that pretty sound. So you don't have to have everything in place, but you have to have the majority of the important things ready to go. So once you have all that done in your contract at Fntp, there's a corresponding schedule, and the corresponding schedule has to be agreed to between yourselves and the lenders. That includes that schedule I was talking about in terms of the construction schedule. All of these things have to be agreed. And once they're agreed, then once you've got everything signed up and you're done, then you're basically in a position where you start getting drawdowns on the capital that you require to meet the schedule that's been agreed to with the lender. So I'm giving you a fulsome answer to say those things are yet to be finalized and negotiated with the lenders, and we're just starting that process now.
Thanks, Ross. Now, does Saddle Hills pretty much kick off straight away after Fntp, or is that the start of the finance? I mean, could you just give us an update on where things are at with this?
Yeah, that's what I just tried to do, I think. When it says, when you're saying, does Saddle Hills kick off right away? What happens is that schedule I was referring to in terms of all of the components will begin in earnest, where you're starting to make your deposits and you're starting, that's all part of the schedule. You don't have to put all of your deposits down right as soon as Fntp is done, but you'll have schedules and deposits that will be necessary in order to meet your schedule. And those all come at various times in the weeks and months after Fntp.
Now, the cutoff date for any submissions to the Alberta Utilities Commission, or AUC, in relation to the Saddle Hills project has now passed, with no submissions being lodged. When are you anticipating a response from them regarding the permit?
We've had a going back and forth with the Alberta Utilities Commission on the permit, And to be fair, with the AUC, you're going to go through a couple different phases and stages with them, and I would say you're never really completely there until it's all done. But I would think things are going extremely well there. So I wouldn't be anticipating much more of a delay here. We're actually not in a delay. There isn't a delay. It's gone quite well. But I wouldn't expect, given the nature of the questions that we had and the answers we've given and the review of those, I think we're pretty much on track for that. That should be all coming together here quite nicely, I think, over the next month or so.
Now, Ross, is the board relatively confident that the main outstanding issues for Saddle Hills, that being 1, final costings, 2, permitting, 3, gas or tolling deal, and 4, contracts in place for debt and equity financing, will those outstanding issues all dovetail together around the same timing, or is one of the 4 issues likely to lag behind?
Well, I think as proper business men, I hope you would expect that we would continue to fight on our costing right to the very end and even throughout it. So the bottom line is we're never going to give up on that. We're always going to try and find ways of doing it. But for the project purposes of Fntp, we're accepting the price that we've got right now, and we're trying to continue to work it down. But we're basically using that as our contracted price with which to work with the lenders, etc. So that's basically, I would argue, that's effectively done, but we are going to continue very hard to get it lower, but we're going to use that number as our basis by which we want to get contracted, okay, and get our debt in place. The permitting, I just referred to the AUC permitting. I think when that comes through, basically we're basically done. So I think we're in good shape on all of that. Now that just leaves us with, I think, effectively the gas or a tolling deal, either gas that we're going to acquire for ourselves and run a plant on a merchant basis, or with a tolling deal. And frankly, we're running down both of those paths very hard right now. What I will say is if we go forward on a merchant basis, we won't have to have a tolling deal, and we probably won't even have to have a gas deal done. We'll just rely on the economics of the project as it is on a merchant basis. But that's why what we're trying to do to ensure that we have the best odds of success and get the best terms we can, we're trying to get a tolling deal done, and we're also trying to get a gas deal done. But what we're taking to the lenders right now and project equity funders is we're taking the deal to right now on a merchant basis and saying, here's what it is on a merchant basis, here's what our numbers look like, and let's firm ourselves up. If it turns out as we go forward, we end up getting a good gas deal, terrific. If it turns out we want to bring in a tolling partner, fantastic. But on the basis of a merchant basis only, that's how we're putting the deal forward right now. And if during that process we end up securing a gas deal or a tolling deal, well, that's all the better.
Thanks, Ross. Now, you mentioned during your presentation that you weren't in a position to, I guess, divulge the unlevered returns. At what point will shareholders be allowed to know what the unlevered returns are, and at what point will the ASX allow you to divulge that information?
You know, that's a really good question because in some respects I respect the ASX's rules on that. And in other respects, I kind of go, at some point, come on, it has to be fair for shareholders to properly understand what it is we're doing. I think what we plan to do is we plan to take our numbers and share the numbers with the ASX, show them exactly where we're at, and effectively, I think, make the argument. And the argument that we're going to make is to say, well, look, we understand why 2 years ago you wouldn't want to do it, but here's where we are today. You know, we have a site. Look at all the work that's been done. And here's what our returns look like on a merchant basis only. If we just relied on buying gas on the market and selling power on the market, here's what our returns look like. What's wrong with saying this is what our projections look like? So we're going to go through that. We don't want to make it, we want to keep ourselves on side with the ASX, but we're going to share that with them and see what we can share. And trust me, it's in our interest to try and get that information out. As much as shareholders want to do it, I can tell you management and the board want to do it as well.
Now, as we close in on the completion of Q3, do you have a costed solution for a 10 megawatt geothermal plant to present to possible clients now?
I tried to refer to that earlier. No, I think we have what we call a generic priced out package of a geothermal project, but it's not in a modularized form. It's just what we would call a stick built estimate. That's not what, we just know that's not what customers want to see. What the customers want to know is, tell us what a package would look like. It's almost like saying, do you have a product? We don't have the product. And so we don't have to spend a lot of time doing that, but with the work we've done with Power Engineers, we should be in a good position here in the fourth quarter to basically have that information taken, identify the major components of what will go in. And by the way, this is a different module than the gas turbine application. It's a different design set. Geothermal is a very different design set. So for this design set, we'll want to have identified the major components or the major vendors of the equipment and identify what those costs will look like, what the performance will look like. We're not going to contract with them because we're not doing a project right now with that. What we're going to do is just use that information to then say, if that's the case, and here's what it looks like, what would it look like as a packaged, a fabricated module? That's what we need to do in the fourth quarter. So we're in a position to do exactly that, properly quote.
So you also alluded to the Klamath Hills geothermal plant. Can you just provide some more details in regards to the plans for the geothermal plant by Klamath Hills, and who are the other owners of that company?
You know, this is a group of guys who were geothermal advocates about 10 years ago, 12 years ago. And they really went to town developing a lot of geothermal assets in the area, but they didn't have a technology solution for what they were looking for. And at the end of the day, they failed. And we came along and we ended up getting involved to try and think we had a project with them. That's a long story to tell, but the bottom line is the representations that they made did not come through in terms of the power purchase agreement from the utility. And it was necessary to have that power purchase agreement in place. Without it, the deal fell through. So this is a group of local businessmen that have been involved in the drilling business, but also involved in the agricultural business down there. They're significant established businessmen, but they don't have the capital to move a project forward. So that's allowed us to take the capital that we've put in thus far and obtain a 50.1% interest in that. We now own that, we now control that. And I don't mean that in a bad way, I mean that in a positive way. We're not looking to control anything other than making sure that we can ensure that the project advances effectively. So now what we're doing, we've redone our lease on one of the properties that's down there, and we're just going to go through a very cost-effective process to, we already got the costing roughly done in terms of what it's going to cost to build it and roughly what it's going to cost for this and that. So what we're going to be in a position to do is cost out what the value proposition would be if we were to build a plant like that. And then what's going to drive how much time and energy we spend on that project will be determined by the interest that we can secure from major corporations like Amazon, Microsoft, and others that are out there in the market right now buying these carbon offsets. And so we hope to be in a position to advance the ball on that here shortly. I'm not looking to say that we're going to spend very much money on that until such time as we know that the buyer is there for those carbon offsets. And if they are, then I think we have one hell of an exciting project there.
A couple of questions that have come through on the proposed Toronto Exchange listing. If a listing on the TSX does happen and a capital raise is required for this to happen, will Australian shareholders be able to participate?
We will ensure that shareholders are able to participate one way or the other.
And following on from that, you have alluded to it in the presentation, but could you just restate what the time frame is for the TSX listing, and will they allow you to disclose the numbers that maybe the ASX won't allow you to?
Oh, that's an interesting question. To be fair, that's one answer I don't know. So I think we'll look into that and find out. I don't know what. That's a good question. That's a really good question. Not the timeline question, the question around the disclosure matter. So we'll look into that and get back, and we'll let people know. In terms of the timeline, hey, listen, I would have liked to have wrapped up a financing 3 or 4 months ago, but I think the reality is two things have to happen. We want to make sure everyone understands what the story is, get as much information out so everyone understands it and is current with it. That's what we're doing. And the second thing we wanted to do is ensure that we're not just doing a TSX listing for the sake of doing a TSX listing. We want to do a TSX listing with committed partners, committed investment bankers, to make sure that it's worth our while to do a dual listing. And that's frankly what we're up to, and we're trying to ensure. And I just cannot give you a timeline on what that timing would look like, other than to say, if they want to get involved with the financing, they will want to see that happen as quickly as possible.
So speaking a little bit more broadly now, Ross, how will this company reach scale and become global?
I think by doing what we set out in a couple of documents we've done, but I hope I try to convey a little bit of this early on. It's not about saying, oh, we have a nice technology, and anyone who's interested in waste heat power, give us a call, and then what we'll do is we'll get some profile on their location and spend 6 months doing an engineering study and a feasibility. That's not how it's going to work. That's how it used to go, and I can see why it was done that way. But we have to be disciplined not to allow that to happen. What we have to do is focus on market opportunities where there are multiple applications of this technology. So a company that needs to for example, this major energy company in the oil sands, they're not looking at one Kalina cycle opportunity. They're looking at multiples for 80 megawatts. If we're talking to an opportunity for gas compressor stations, we don't want to find a single gas compressor station or two of them. We want to have an opportunity to go after multiples of them. And in so doing, to be able to go after those multiples, we have to have a package for each Kalina cycle. And there are 7 different versions of the Kalina cycle. 7. In fact, there's probably 11 if you get complicated about it, but there's 7 basic families of the Kalina cycle. Each of those applications, if you're going to go after markets, will require full modularization, identification of the key major vendors, because they may not always be the same, and then a supply chain and EPC partners to go out there and deliver them for us. That's what's involved. And that's why we need these first commercial projects in Alberta to be established, so that we have the cash flow from a profitable business in which to do this.
Thanks, Ross. A couple more to finish off. Can you just talk us through how well the patents are protected?
Very well. I don't know what to say on that.
That's right.
We spend a lot of money every year, and we do review the patents, and sometimes we let some patents expire, and then we add some more. And I think we allude to it in the appendix in this presentation. I hope it's there, but I'm not sure if it is. But if it is, you can flick through to it there, Alex. It's at the very end. It talks about our IP. There are three, let's call it sectors of the IP. There's the traditional IP that Kalina had developed over the years up until, let's say up until about 5 or 6 years ago. Then there was the IP, there we go, intellectual property. There's 317 patents in the portfolio, and that's across application patents and process patents. The initial portfolio had 10 individual patents for over 100 individual patents. Then we acquired the Siemens IP portfolio in 2017, thanks to some really good work that Tim Horgan did, which was just really, really quite brilliant, to be honest with you. And that put us in a position where we acquired their 7 patent families, which covered 146 patents. And then Tim and myself, was I the bad guy or was Tim the bad guy? I can't remember. One of us was the bad guy. We acquired the balance of the IP from the estate of Dr. Alex Kalina in 2019. And that involves 30 different patent families and 50 individual patents. And then there's another 41 miscellaneous patents in the mix. So altogether, we've got 317 of those patents, and we review them all the time. And sometimes we drop some, and then we're looking to add some more, and so on and so forth. But they're international in scope, not registered in every country. Some countries it doesn't make sense to register them in, others it does. And without going into great more detail, call Tim and ask him if anyone's really interested, and he'll tell you all the gory details about protecting your IP.
Thanks, Ross. Just three more questions now. If the Kalina technology
Okay,
is
three
as good
more.
as you say it is,
Alex, that's a lot of questions. Three, we have, honestly, there's only three more because that's a lot of questions.
only three more. So we'll
right.
shoot through these ones really quickly. If the Kalina technology is as good as you say it is, and if I was ORC, I'd be looking at a bid for KPO. Has ORC made any gestures, or have there been any discussions in that regard?
I think when you said ORC, you probably meant ORMAT, which is which practices ORC. No, because there's some bad blood in history going way back to the Dr. Alex Kalina days between ORMAT and Kalina, and it always surprised me that they weren't there. But I frankly think that if you're asking me, no, there is no one right now that we're talking to who's looking at acquiring our company, but there should be.
Well, just following on from that, Ross, is there much interest from institutional investors, and why haven't we seen any take a stake in the company yet? And what do you think it will take before an ethical fund makes an institutional investment in Kalina Power?
I think that's a really good point. And without saying too much more, here's what I will say. What I'll say is one of the reasons that investment banks in Canada are interested in our story is because, as they said 2 and 3 years ago, institutional accounts would not really typically look at a story like this. Small market cap, you know, pre-revenue, pre-profitability, all that stuff, nah, they're not going to look at it. But what has happened because of the huge surge in ESG investment and clean tech investing, what's been happening is as they say, a lot of the institutional markets are having to go down market right now. They can't find investments that make sense, that are huge investments. They have to look at these smaller and smaller deals. And let's be honest, we're still a micro cap company in many respects. Maybe, you know, some people would think we're beyond a micro cap. I would still say, depending on which exchange you're on, we're probably still viewed as a micro cap company. And for the first time ever, these banks are starting to see institutional investors starting to look at that. Now that's happening in Canada. I've been frustrated that we've certainly spoken to a number of institutional accounts in Australia, and we haven't gotten the traction that I thought we would have. That being said, we're just going to keep on doing a good enough job to earn the right to get that their investment attention. I think that's our job, to continue to deliver and perform. And if we do that, I think there will be no shortage of interest. That's my opinion. But that'll also require us to perhaps consider our share structure, our capital, and all that sort of thing. But I think we're on track to earn that right.
And last question, Ross. You know, I appreciate it's getting a little bit late in Vancouver as well. So this is the final question. Is the company looking at industry players to invest in KPO? Yeah,
of course, I was just teasing about the questions, because if there's more, I can stay here all night. No, we're not. Our job is to always ask that question, right? I mean, that's what I'm always doing. I'm always going to be asking the question. I'm always going to be asking the question when we feel we've earned the right. What do I mean by that? If I just have an introduction to a company and they're a big company and they're interested in they're not going to be interested in necessarily making an investment in our company. But if we start to develop any kind of a relationship, you can bet your dollar I'm going to ask that question, and I'm going to ask that question multiple times. And at some point in time, we'll be striking enough interest that we will get investment from some of the strategic relationships that we've developed.
Thanks, Ross. Now that will leave the questions. We'll leave the questions there, and I think that's all the time we have today. You've been very generous with your time, so I'd like to thank everyone for joining me, and obviously I want to thank Ross for presenting and taking the time to answer some questions. Now, as I mentioned before, a recording of the webinar will be on Kalina's website and social media platforms later today. Now, Ross, before I let you go, do you have any final comments to leave with us today?
I thought I answered the last question. That's the fifth question. I'm just teasing. No, listen, I've really enjoyed the opportunity to talk to you today, Alex, and more importantly, to be able to address a lot of the questions that our investors have asked today. And if for any reason we haven't asked or answered them adequately, I'll encourage you guys to reach out to us, and we'll attempt to do so more fulsomely.
Fantastic. Well, Ross, again, really appreciate you jumping on to take us through the presentation and to answer a few questions. That wraps it up for us here. Now, as I mentioned, and Ross mentioned there as well, if you have any further questions, you can feel free to send them through to myself, alex@investorstream.com.au, and I'm happy to forward those across, or you also be able to reach out to Ross and the team as well. Ross, really appreciate you joining me today, and all the best.
Thanks very much, Alex.